The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we definitely saw another volatile week in the market trade. Friday's edition, well, for the most part, it was quieter in the grains, a little bit higher in beans, a little lower in corn and wheat. Livestock had a decent day, and the stock market, for the most part, rallying. We haven't been able to say that much here in the last several sessions. Let's take a look at everything as we closed out the week on Friday. Brian Doherty, Senior Market Advisor with Total Farm Marketing, joins us. Brian, good to connect with you as we close out another week in the trade and headline risk and tariff talk and a stock market under heavy pressure and just I guess there's no shortage of things for us to discuss here.
And a major storm system blowing through. So you bet.
Absolutely. Brian, I mean, just your assessment of Friday's trade overall.
Interesting. Beans percolated up at the end, which was quite interesting because they probably have the most less, that doesn't even make sense. They have fundamentals that aren't that friendly, right? So the USDA report here earlier in the week didn't really tell us much, kind of kicked the can down the road, Jesse. But beans percolated up a nickel higher here. Meal steady, soybean oil up a little bit. Talk this week of a strike in some of the crush plants, I guess, in Argentina. That stuff's what I call chatter. It comes and goes, usually not long-lived. Corn prices finished down the week about a dime. Now, that's after coming back last week and finishing in May corn about unchanged for the week, which was a huge victory because last week we saw the low come in at 442 and finish at 469 and a quarter. That's quite a jump off the low. So really the damage was done all in 1 week, and that was the week of the 24th, where we saw heavy fund liquidation and saw, Jesse, one of the, if not the largest 1 week liquidation of corn contracts on the Commitment of Traders report from a historical perspective, maybe ever. So lots of volatility. Reports coming up at the end of the month, acreage and stocks reports, those will loom large. I think the lean is certainly toward more corn acres. It's just how many bean acres may get lost and whether beans can mount any kind of comeback on the idea that carryout could narrow in the year ahead. But first, you got to see if there's any issues with finishing the harvest in South America. So, yeah, a lot of moving parts. I would say probably the one contract that probably showed the least, some good strength this week was Kansas City wheat, worried about dry weather.
I wonder, and I'm going to divert here, how much has all of the stock market turmoil played into commodities? Because it hasn't seemed like it's been a safe haven for stock traders necessarily. It seems like they might be going to treasuries or something else. I mean, what's your perception on all the stock volatility and moving it over to the ags, for instance?
Right. So the hope is, boy, the stock market's falling apart. We'll see a lot of money move into ags and commodities and things like that. Well, you look at the cattle market, the way it performed this week, and you look at some other commodities where you're tight on inventory. But when you look at like a corn market, a wheat market, a soybean market, when you look at kind of the big fundamental picture, you're kind of in no man's land right now. There's not enough weather really anywhere to have impact, or the weather that could have impact is not impactful in South America this week. You're a little early to talk about issues with planting season here. So you've got, I think, decision makers looking at this and going, well, the fund buildup is pretty strong in corn. Do we move back in? And it's thought that funds were buying back into corn, but they're not doing it in such an aggressive fashion that it's moving the market right now. So unfortunately, this is just one of those weeks where I think the market is more or less marking time. It's waiting for more direction, more news that's concrete. I don't know about whether the money shift will go from equities into commodities. I think the equity market fell apart so hard that, to be frank, I think the equity managers are looking at equities and where the value is and trying to find value there. That's a pretty hard push in a short period of time. Yet in an economic environment that one has to argue, is it negative? Core inflation was down a little bit. That doesn't sound negative to me.
No, it's just been a very interesting dynamic, I would say. And, it comes back to the tariffs, the on again, off again, who's doing what percentage is it? Uh, there's so much at play, and I like how you said marking time. I wonder if these markets are going to really start marking time until the end of the month. March USDA reports that you mentioned, and this proverbial April 2nd, Tariff Tuesday that could be in front of us here. I just wonder if those things are what the market is going to be waiting for now.
Right. Tariff Tuesday is a good term. I hadn't heard that one yet. So, right. So that's looming large. And with that coming ahead and these reports coming ahead and the market's somewhat volatile, I just think a lot of people kind of move to the sideline. I know just talking with farmers, it's not high enough to sell. It's not low enough to make it an easy buy or re-ownership. So I think there's a lot of just holding on and seeing what happens here in the next several days, and consequently, that's where I'd like to believe that the market is focused right now.
You mentioned Kansas City wheat being a bit of a bright spot this week. Anything on the chart there? Does it look healthier to you this week? Things like that. You mentioned the weather. I'm wondering if that has an impact with all these strong winds coming in here and more potentially kicking up a lot of dust. I'm just thinking out loud here, Brian. I mean, what are you watching on that chart specifically?
Well, July Kansas City wheat on the weekly charts gained a little over 20 cents for the week. That's a pretty solid gain on the week. Now, last week they were down 8 and 3/4. So for the last 2 weeks, they've gained about 12, 13 cents, but they finished way off the low last week as well. So finished at 577 on that July KC contract with the low last week at 556 and a half. So we have to give some credit to the idea of bouncing 20 cents off the low last week and then again this week. And on weekly charts, looking at above some key weekly resistance points, the 10-week moving average and 40-week moving average. Daily charts look a little bit more supportive in the sense that it's really a nice leap up. Now, all that being said, look today, we pushed into new highs and yet finished the day a little lower. So that's called a hook reversal. So it's not a sign that the market's done going up. But KW wheat in the July did push up against the 200-day moving average. Really nice correction there, and then it failed this morning. So when you look at where it finished on the day, a little bit disappointing, but solid for the week. And I'm just looking at that chart here. What I wanted to do real quick was just kind of give some perspective of what a a retracement might look like there. And so what I'm doing is just putting on a real quick retracement there. So the market peaked about 3 weeks ago, 4 weeks ago, and went right up to here to the 50% recovery. So that's if you see a market that makes a move, look for that 50% recovery. It did that today. I think traders took their profits for the weekend and they'll start over next week. But suffice it to say, between the wind and the warmer, drier forecast in the Southwest, it's not a good combination for that Kansas City crop.
Looking at the corn chart, I know we got to the 100-day moving average Thursday, 465 and a half, I believe. And we couldn't hold that, though, into the weekend. It looks like we got support kind of around that 450 mark in May corn. Anything of note you're watching on that contract or even new crop corn right now, Brian?
Yeah, so a couple of things. The 455 area is the 200-day moving average. That was a low from earlier in the week. Finished the week at 458 and a half. So had a good start to the week. Not the best of finishes as you look at the big picture perspective. Good consolidation, though. I think the bulls would be a little bit disappointed that the gains from earlier in the week gave way. Looked like that market might have a move back up into the 485 area and instead finished 458. Export sales were in the good category, not great, but good. If you look at kind of big picture perspective, the idea of more acres is kind of an anchor on the corn, but that's into the new year, and that's why there's an inversion. Some of the basis levels around the country are pretty snug, and that continues to remind us that maybe in parts this corn crop wasn't as big, and the USDA did reflect that through lower yield in both November and January. So consequently, I think you're seeing a market that's just, again, kind of waiting here to find more direction as far as, what's the perception besides more acres? Are we going to, in fact, continue this strong export pace? The dollar about 7% off its highs from earlier in the year might suggest so.
How about soybeans? Any chart action there that you're really keeping an eye on as we head into next week?
Yeah, well, just that they held $10 this week and
Yeah.
finished the week on a firmer note, and that's maybe a victory there. I just don't have a lot of news or
Yeah.
perceptive news that's creating this environment where, boy, we were just thinking it's a matter of time before they really move up. Unfortunately, the world's just got an adequate to more than adequate supply. Um, world carryout's large. I got to recheck my numbers there, but I'm going to say the world carryout is larger than the U.S. production. So there's a lot of cushion, is my point. And I just don't see the end user or speculator jumping into this unless they really, kind of feel confident that there's going to be some drawdown in supply for some reason. That would probably have to take a weather event.
Brian Doherty, Senior Market Advisor at Total Farm Marketing, with us here today on Market Talk. A few livestock notes and dairy from you, Brian, before we close it out today. Cattle and front month hogs futures did fairly well on Friday, I would say. Any big notes for you in cattle or hogs to close out the week?
Well, cattle, they finished firm. They had a number of days in a row there where they just kind of retraced everything they gave up, and the April contract looks really impressive. Did not exceed yesterday's high, but yesterday had a nice high and then kind of gave some back. Finished the day near the high end. Looks like a good cash market into next week. So I think that April now reflects more cash, and cash around 200, 202 is probably what you're going to see. Maybe even a little better. The feeder market remains on fire, tight inventory, auction barns remain active. The milk market, not sure what transpired late in the session there, but had a good up day going, hit some overhead technical resistance, and then reversed right back down. And not a very friendly looking end of the week with some really nice activity during the week. And that's been a disappointment. Last trade has April down 62. Currently trading at 1748. We saw a high of 1822 yesterday. So think about that. 22 and 52 is 74 points off the high, just that quick. Broad-based selling on the front months. I think some sell stops were triggered once the market pushed through yesterday's low and then the 10-day moving average, that it created some additional sell interest there. Weakness in the blocks and barrel cheese on Friday did not help. Down 4 cents in the barrels and 6.25 in the blocks. Butter continues to hover near its contract lows, so we're just not getting that step up, significant, strong cash cheese buying. And today was a pretty tough day in the cash as well as the futures once it turned around.
Final thoughts from you. I will open it up for any words of wisdom you have for producers as they're taking a look at all this volatility and more in the markets. Brian, what would you leave folks with today?
Well, again, the theme is control what you can control, right? So you can't control tariffs, you can't control export sales, you can't control the weather, you can't control what the report's going to say at the end of the month, but you can certainly be positioned for that. So, as an example, if you're concerned that corn acreage could creep up and you want to have some defensiveness into the new crop, well, look at the short dated options. They can get you through that report. So continue to be vigilant, looking for opportunities and ask good questions. Cattle markets bounce back really nicely. Is it on the way to something bigger, or is it just a bounce back that's going to come under pressure? With the stock market down as hard as it is, I do concern myself that the consumer who was buying beef at any cost didn't really care. That's fine when the stock market's moving high and their 401k and their investments are doing well. When they get dinked pretty hard, I get a little concerned that there's going to be a lag in demand that might show up next week.
Brian, if folks want to reach out to you and ask some questions, I know they could do that easily at Total Farm Marketing. How can they reach you?
800-334-9779 is our phone number. Brian with a Y at totalfarmmarketing.com, or check out our website at totalfarmmarketing.com. Great resources.
Always appreciate the time. Brian Doherty, Total Farm Marketing. Have a good one, sir, and we will talk to you again next week.
Thank you, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.